It's a bull. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Got my happy fishes on the live cam here in Deerfield Beach. Look at them. They're all smiling, and why wouldn't they be? Oh boy, look what's going on in the background there. That looks like a school of mackerel, and you don't see that very often. You're fishing. I don't think that's no, maybe ladyfish. It looks like a school of ladyfish. Okay, kind of interesting. Don't see those too often either. Well, anyway, we're not here to talk about fishing. Of course, when I grew up, I would have rather been a fisherman or something like that, or something fun, fireman. I don't know if that's too fun today. Let's move along and actually, you know what? I'm glad I grew up doing what I'm doing because I have a really good time. Um, you know, There's an old saying that teaching an old dog new tricks is pretty tough, but that's nonsense. I got to tell you, teaching dumb old dogs new tricks, is difficult. Any old dog that's been around for a while that's smart enough to admit they're not always right. And again, you never learned anything from someone you agreed with necessarily. So the people you learn the most from sometimes are the people you disagree with the most. And us old dogs know that. And I think you can't teach an old dog new tricks is not true because I learn new tricks every day. Not every day. I don't say tricks, but I learn new things all the time. In fact, I was mentioning last week that Ted Butler, I've never subscribed to his site, and just this week alone, I've learned a couple really important things about silver markets and stuff. And Ted Butler is an old school guy that's been around a long time and knows these markets real well and how they're manipulated. One of the things that I've always been railing against ETFs for the longest time. And there's Ted Butler kind of makes a suggestion that ETFs are really our friends in the silver market. And I'm going to get into that in a little bit, just really short. I'm not going to get into his article right away because it is a paid subscription. I'm not going to go verbatim or anything, but I want to discuss something that I did learn. Let's first take a look at markets. They're up again. And I knew it. I didn't think unless we see a complete financial collapse, which I don't think we're seeing, like we did in 2008, that type of collapse. Maybe what we're seeing right now is a slow, sustained collapse. Who knows? Maybe they're gently letting this thing fall. But if we see a collapse like we did in 2008 in economic markets, world markets, domestic market here in the U.S., we'll see sub $20 silver. But I hate to say I told you so, but I told you so. I didn't think we were going to see sub $20 silver, and that's a pretty brash statement on my part, but I just didn't see sub $20 moving down from that $30 mark. I felt that we're in the 20s here for a while, just like when we broke the $10 mark. The $10 mark, we broke it. And once we were up in that 12 to 15 mark, we never saw $10 again, especially when she started touching the higher end. I feel we're in that same kind of similar territory with silver. Highly doubtful we'll see $20 silver again. If we did, it wouldn't last long, or it's because in a direct result of an economic collapse. Silver looking pretty good, but let's take a look at gold first, and we'll look at the charts here and see when these overnight highs and lows happen. 1787 was the low overnight since the New York closed yesterday. 1801 is the high. 1797, so currently sitting close to its high right now. For some reason, that remember we did a show one time on psychological numbers, and psychological numbers are like 1800, 1900. For some reason, with gold, it's that $100 mark, and with silver, the psychological mark. I think the psychological mark with silver now is not, it used to be like $1 and $2 increments or $5 increments. I think the psychological mark for silver right now across the board is $30. It still is $30. That expectation is there, but I'm going to get into that in a minute as well. But psychological numbers, you notice how it's just below 1800. It really is for all intents and purposes. I'll kick in $3. It might as well be 1800. But for traders, for some reason, in the markets, I think all markets are like this. I can't point it out in the Dow or anything like that. But gold and silver definitely have psychological numbers. And don't ask me what the psychological part of it is. But for some reason, it's like 1800, 1900. And again, silver, I think the psychological number right now for silver, just because we busted 30, there's an expectation there. Maybe that's the best way to explain it, is the mass expectations create those psychological numbers. That's probably more like it, okay? Overnight, again, we'll look at the charts here. I don't want to digress too far from what I'm talking about. Silver's currently sitting at 23.38. 22.93 the low. Again, for all intents and purposes, 23, but it looks like we busted that $23 mark. But you know, silver's crazy, and you've got the big whales out there, managed money and commercial banks that could do anything at any given time to drive that down. However, as I said the other day, I think they're losing this battle in the long run. This is a battle of attrition, more or less. And from what my man Ted says, the managed money is the ones that, and they're more technical traders. Okay, the managed money is who commercial banks are trying to get to take over the short positions that they once held. I think some of the commercial banks like JP and them have gone long already. Believe it or not, JP is love them or hate them. They are in the same position that most silver investors and stackers are in. They're in the long position, so they're going to make a fortune, an absolute fortune when these markets turn around. And trust me, if JP is in there to make a fortune, you know, if you follow the ride, like. And this goes back to the saying that I've always said. Of course, the game is rigged, but if you don't play, you can't win. And how do you play the game? Well, you know how the game is played, and you know who the players are, like JP. You know how COMEX and the central banks or commercial banks. I'm sorry. You know how COMEX and the commercial banks manipulate the price of silver. You know how it's done. The numbers are there. Ted Butler's been talking about it for years. Like I said, you don't even have to have a subscription to Ted Butler to see his old stuff that explains how this manipulation is done. Again, a lot different than the gold market. 23.52 is the high. We're sitting not too far from that high, 23.38 currently. And as I said, after this, we'll take a look at the charts and look at the gold to silver ratio as well. I want to point out something interesting that seems to have been holding true. Platinum has kind of been leading the way up and down for precious metals. When gold and silver were in the green here, you know, when they were going up, and gold and silver were in the green there for a little while, you know, when we were in higher territories, 18 plus, and we were in the $25, $26, $27 range, when platinum started moving down before gold and silver did. So platinum started marching down. So gold and silver weren't really dropping that much to the levels where they were recently. But platinum was going down. Then all of a sudden gold and silver followed. Just a little trend I noticed. And in this most recent trend upwards, guess what? Platinum seems to have gone up before gold and silver. The moves up, you know, keeping its higher high and a higher low. Platinum has been kind of leading the way, and now all of a sudden gold and silver kind of doing the same thing. Again, these are just little, when you watch a market every day over and over, you see these little trends, these little things, and then sometimes they just last for a short period of time, they go away, and sometimes they're really meaningless. It's just a coincidence. However, and this may be a coincidence, however, I did notice of recent that platinum seemed to be leading the way in the precious metals markets as far as getting on the path first, downward or upwards. Might be coincidental, maybe not. I don't know. Don't know what to make of it, but just an observation on my part. This is what happens when you look at something every day, folks, too long. You start to see things. You start to see patterns like the dead, you know, like the kid sees the dead kids or the dead people from the Bruce Willis movie. Gotta keep referencing that. Let's see what else is going on here. You know what? Let's move into the gold price. 1787 low, high 1801. I got some cool things to talk about as well here, so hang on with me if you will. 1798 currently. Let's see. Do I even need to do a refresh? Nah, screw it. We're right in a similar range. Current gold price right here is there you go, right there. And where did it make its move up? It looks like it made the move up in the London market. Apparently, I think it was. The London market. Oh, there we go, refreshing. Yeah, I would say the London market is where the initial push above 1800 was, and then it's being carried through in New York right now. Here's our current line where we are. What is that? Red is yesterday. There's that little bump. Look at that, down to 1760 in the low. That was the evening before we hit yesterday's morning. Whoop, bump right there. Take a look at that. So things are changing out there for gold quite dramatically. And again, here's today's line right here. And if you continue it from yesterday, bump down. So we've made quite a move from 1760 almost to the 1800 range, $30 to $40 move here. I believe it's going to keep it and hold it for right now. I really do, for some reason. Also, apparently there is a huge whale out there. Ted Butler. Again, I keep talking about Ted. I'm so impressed with the guy, though. I like reading his newsletter, and I don't even get paid to say this, so he don't even know who I am. But no less, one of his thoughts that there's a big whale in the gold market, and he believes that John Paulson has made a huge, huge move when gold hit its low there. What was it, 1720s or something like that? Some whale came in and bought a huge amount of physical, and Ted Butler is assuming that it's probably John Paulson, and he's probably very well right on that as well. So there's a huge whale in the market that's making a huge amount of money right now. I don't think they're getting out anytime soon, and I think we're going to continue to see gold prices rise from here. Nothing good is happening in the political world, the economic world, period. And again, that's what really motivates gold and silver to some degree. Let's take a look at the silver here. Silver prices too, again, low 22.93, a high 23.52, and currently sitting at 23.30. I'm going to refresh this browser, not to confuse you guys or myself, but and these are courtesy of these spot prices I get. That's actually a subscription service of CCE, Certified Coin Exchange, probably one of the oldest online coin exchanges out there. They've been around. I was using this system when I was working for my father, not in the 70s, and this system was around even in the early 70s. I remember my father first came to Florida and worked for a coin shop. They had the old ticker tape you'd feed the tape through. So just to give you a heads up on who I get the spot prices from. The reason I like them static is because they're not changing all the time. I can kind of just make comparisons like I am with the charts right now. Silver 22.93, 23.52. Let's take a look at the 24-hour spot silver chart right here. And there we go. Currently, there's our current market right now. And where do we make our, well, there's your bump yesterday. Look, we were in that 22.60, 22.80 range. And the day before, take a look at this, 22.60. Even lower than 22.40 this last week. What was it, Monday, I think it was? Yeah, Monday, I believe, or Tuesday. That was on Tuesday. Look at that spike right there. I mean, look where we were sitting. Also, look at that same spike about the same time, and if you look at the gold chart, it's the same exact day. In the London market, that probably, no, actually, London or New York, probably New York, I'm sorry. That's in the New York market right there. Well, where that bump started, where it bumped down and then bumped back up. Probably London markets close down like that, and then New York opens up. I don't know. I'd have to take a closer look at it. I don't know where the trades were made, but no less, the chart doesn't lie as far as when it happened. And here we are. Here we are right here, 23.40 plus, at the high, and we're kind of sitting at that 23. What is it, 23.37 right now. So things are moving up. Things are looking really good, and that's probably just due to the result of the deteriorating situation politically and economically out there. And that's one of the reasons that we have bought gold and silver, folks. It's a hedge against bad times. Also, wealth preservation primarily. But it looks like you can make yourself a nice little chunk of change here coming up as well. Let's talk about, of course, some of you won't. Most of you are going to die with your silver. I know I might too. I got no one to leave it to, though, so I probably won't. I'm going to try to spend everything I have before I go and make sure that the last check I write bounces on the undertaker. That's an old saying. Really, if you're an undertaker, don't take any offense to that. I'm not going to bounce a check on you when I die. So, but the point is to try to spend it before I go. I got no kids. What do I care? I'm not going to leave it to anybody, but anyways, oh boy, you saw the greedy side of me actually right there. Anyways, let's move along to what we're talking about, the spot prices, gold and silver. The gold and silver ratio, real quickly, let me do the gold and silver ratio here. 1798 divided by 23.37. Let me do you, Siri. Divide 1,798 by 23.37. 76 to 1 it looks like. So our current ratio is sitting 76 to 1, 77 to 1. And where does that put us on the chart? I'm going to go to the 30-year chart because that's probably the one. That's since, well, hold on. We'd have to go a little bit longer than that. Let's go to all years again. Sorry about that. Where is, there's when we got off the gold standard right thereabouts. And where was our last big bull market? There is November 1990, where the ratio got 92 to 1. But let's take a look at our last, the first big bull market that we saw was 1980s. There we go, right around here. That's the peak of the market. The ratio, the gold and silver ratio, was around 28 to 1. Let's say 28 to 1 with gold and silver. And then at the peak disinterest of gold and silver, when nobody cared about gold and silver, and this really was probably pre-1991. There was a lot of years where silver and gold prices just kind of meandered sideways for a long time before it took off again, right about 1991. So we had a gold to silver ratio about 86 to 1, but for those periods where nobody really cared, look at the ratio there, slowly climbing from the low. Where are we at right now? Look at that. That's 2020, where we almost hit that 120 to 1 ratio. And again, currently on the chart, I think it said 77 to 1. We're sitting right about here. On the 30-year chart, though, we are still above what I would call the average. The average was lower than that. We're sitting right about here, close to that 80 to 1 mark. And I think, if I'm correct, the average is closer down to here. So the gold to silver ratio is kind of getting a little higher right now. It's kind of odd. Let's see what happens anyway. With that, kind of curious what the next bull market will show. I know. I've been blathering over Ted all this time, and you'd think I was in love with the guy, and actually I'm in love with his data and his information, so I think it's going to make me a smarter trader. You know what I told you? You can teach an old dog new tricks. You just can't teach a dumb old dog new tricks. And I'm a smart old dog, and so are you. That's why you're watching your videos, and that's why you're putting away gold and silver, instead of watching 20 minutes of news every morning and 20 minutes of news before you go to bed of the narrative that, well, anyways, won't go there right now. We talk about that all the time. Let's take a look at Wall Street and see what the markets are doing. I know I haven't. I had a Wall Street subscription for, I can't tell you how long, years and years and years. And in 2020, I just got fed up and sick of it, especially with their election coverage and all that stuff. It was sickening. So I finally just screwed. I'm not paying you $500 a year, whatever it was for it. Anyway, this is their free page. Anyone can look at it. So I'm not giving you any private information here. Looks like there's a bounce going on in Dow Jones, SP, and oddly enough too. Gold and silver up today and yesterday. So, you know, there's a great, if you take a look at it, you would expect the opposite to be happening. You figure if the Dow's out and the SP's down, gold and silver might not be doing so well, but there you go. There you go. These things don't always go together hand in hand. But you know what does go hand in hand for sure? If you look at the medium long-term picture, the fiat dollar. The more they print, the more they put out there, the stronger gold and silver prices will eventually get. It may have some lag time, but it happens, no doubt. You can look at it. It's a historical fact that it does happen. And for you folks holding gold and silver to the new to this, don't worry about it when you see these downs. You'll never wake up in the morning and hear that your gold and silver went bankrupt. Ever. And the only way you're going to ever hear your gold and silver disappeared is if you left it with someone else. Third-party risk. I don't care if it's an allocated ETF or an unallocated ETF. And talking about ETFs, one of the interesting things that Ted, I started at the beginning of the show, talk about. Ted talks about how ETFs, you know, I always thought that ETFs were, and I still am not quite sure. I'd like to know that the ETFs, SLV and all that stuff actually has the physical silver. But, you know, according to Ted Butler, I haven't seen, you know, he mentions that the SLV does have the physical silver. They keep it in 1,000-ounce bars. People can ask for delivery. And he also suggests that the ETFs were the best friend of the silver market. You know, overall, it did help the silver market. It created more interest and for people to get into silver in a different manner, maybe for their IRAs and that kind of thing, which he does have a good point. What he does, you know, gold and silver physical does have premiums and stuff, but it's a one-time charge. When you have an ETF, and I can explain that, I had Sprott in my account for all these years. It's worth half of what it was. I think I got eaten up in fees. That doesn't happen with your precious metals, your physical precious metals. Ted also points out, rightfully so, that retailers like myself, you know, I'm a precious metal retailers, rightfully so, don't like ETFs because it takes business away from us. He's right, though. He's right. I mean, I don't like ETFs. I'd rather see someone buy physical bar than go and buy an ETF. But apparently, Ted feels that ETFs are backed. I'd like to see the data on that, and I'm sure he'll show it sometime. But they are backed. Even the unallocated accounts are backed. There is silver behind this stuff in 1,000-ounce bars. Again, I'm going to start reading more into that. But you know, teaching an old dog new tricks, well, you know, maybe I'm going to have to look differently at the ETFs and look at them as more more like our, not our best friends in the retail market, but our, something that does help the price of silver by keeping more silver off the market. Again, if these ETFs indeed, SLV, the unallocated accounts for the smaller peeps, if they indeed really have the silver to back it up, then I guess I'm okay with that. That's cool. My fear is that they don't have the silver to back it up. That's been my fear for the longest time, but maybe I'm wrong about that. So this old dog did learn new tricks that possibly ETFs could be our friends. But again, I like physical. There's nothing, I'd rather own physical than have someone else hold it for me. So even if the ETFs, and likely do, because Ted knows more than I do about this, do have the silver to back up the SLV and back up that stuff, on a physical level, if they really do have the silver, I still think it's third-party risk having someone else hold it. I mean, what if something happens to them? What if, the silver gets confiscated? What if someone made a mistake and thought they had enough? I don't know. I'd rather the nice thing about having physical is that you have it in your own greasy little hands. I'm describing my hands, not yours. Sorry about that. And that's why bars slip out of my hands all the time. No. We have it in our own hands, and you can count what you physically have. And unless someone comes steals it from you, you're not going to encounter the third-party risk you could online. And again, online, electricity is required, all the internet access. If you have a account with SLV or a Sprott or whomever, the whole world is privy to that. Say if government hates you one day, they say they hate you, but say they've deemed you've done something wrong, or they rightfully or not rightfully, and most likely you'd be more concerned if it was not rightful, and they've accused you of doing something wrong you didn't, or they just said, well, we're gonna freeze your accounts. That could include your SLV, but can they freeze your physical gold and silver bars? No frickin' way. Not after you lost them in your boating accident. So I'm just kidding. Let me move along from here. Not much to read. Let's see what the corporate news is talking about. Boeing runs into trouble. Winner of giant gas. These people are certainly, I don't know how they do it, but they manage to take news that fits the narrative, that's negative, and make it sound not so negative. And then if there's the narrative wants them to paint a negative picture, they can sure do a nasty job of that. They did it in the elections, that's for sure. But let me move along from there too. ZH, not too much in precious metals out here. Some cool articles here. I'm going to just kind of go down and make my little snarky comments as I go. Well, gosh, one day I'd like to do a political show. We'll see. Maybe. Here is a hidden, well, that doesn't surprise me. That doesn't surprise me, and I guess mainstream media is finally picking up because there's actually investigations going on and proof that this really happened. And oh man, did anyone read Michael Burry's epic Twitter rant? If you didn't, I suggest you do. You can read it for free on ZH, by the way, even if you're not on Twitter or something like that. Didn't read this article. This is kind of interesting. Just saw this under executive order of the president, talking about confiscation. By the way, they're never going to have gold confiscation in our lifetime, and I've done many videos on this as well, so I'm not going to look at that real quick because it starts out with the confiscation thing. Confiscation is bullshit. Maybe hold on, let me just click on it. Could this be the blow-off of tyranny? All right, a little too complicated for me to read. If you guys want to read it and make a comment down below, let me know what you think. Where else? Oh, it looks like everything changed up here. The whole page did. Good for these guys. Glad to see that. The new great normal purge. Yeah, speaking of purge, I've told you I've got purged from Facebook for quoting the Mises Institute. Wow, what a shame that was. 12-year account I had with them too, over something that was just a scientific article. I won't go into it right now. Okay. Furious Republicans demand DOJ stop interfering with Texas. Oh gosh, I don't even want to get into that. That's a whole different thing. Supply chain crisis effects on gold and silver. Oh man, I missed a couple good articles on the. Let's take a look. Click that. See something I need to read here. The broken chain could be worse than the oil crunch of the 70s. Anyone that bought a new car. All right, again, another thing about demand and supply and demand. All right, I'm going to skip out of ZH. Apparently, I've missed a few articles here, and my snarky comments could go on forever. Let's stay with gold and silver and precious metals here. Seeking Alpha, another site that I've subscribed to, and pretty cool site too. You can read a lot of these articles as free as well. Just go into the, I think it's the, where is it? Latest news, and then go into precious metals or something like that. It's around here somewhere, and that's where you get this these articles. This stagflation is serious market risk. Silver is your inflation protector. I just read this one here, and it's done by Equity Management Academy. The summary more or less says it has been difficult to trade the market based on fundamentals since the pandemic struck. We appear to have several new black swans on the horizon to further muddy application of the fundamentals. The Fed is facing issues of tapering, whether to raise interest rates. Well, we know that's jawboning, and even if they do raise interest rates, it'll be insignificant, really. They'll make it look like a huge deal. They'll do a little rise in the interest rates. But on the other hand, too, what if I'm completely wrong? What if the Fed cares less if the U.S. government goes into a junk bond status? What if the Fed just says, screw it, we're going to raise interest rates incredibly and causes the U.S. government to default? Would they do that purposely? Yeah, they would, probably, if there was a motive of making them the top dog on the heap. You know what I'm saying? If they could still survive and be the top dog, yeah, they would do that. I don't see how it would be done, though. Right now, I don't. It's not that clear to me. There's a lot of pent-up demand coming into the market in the face of shortages of just about everything imaginable, which reminds me I better go order my car today before it's too late. I've got to order a car, folks. 6 months to get it. You believe that? 6 months because they don't have any to sell. Well, I'm going to move out of here. Good site, Seeking Alpha, should be on your bookmark bar, as should ZH should be on your bookmark bar as well. It's a nice counter to the mainstream narrative that they feed you on a daily basis that they offer. What else is out here? GATA.org. Banks prepare to scrap LME gold and silver contracts. That's something that happened back in 2017, 2018, and nothing exciting to read, really. I don't know how that has a direct influence on what we're doing today. And this is real interesting. Pam and Russ Martin's quietly, the Fed identifies banks that got billions in emergency loans in 2019. And this is before the 2020 crisis, the 2020 closures, and the 2020 C19. I mean, this is before that. And a lot of people don't recall or don't remember that the real crisis really started to rear its ugly head with the repo rates and everything back in 2019. I mean, we were in some serious economic trouble. Perhaps the closures and everything in 2020 gave banks a little leeway to pull themselves out of that. I don't know. Maybe that's why we had all the closures and the entire economic shutdown, more or less. Maybe it had more to do with saving the banking system, but that's a conspiracy on my part. But no less, the Fed gave billions to a lot of banks, JP included. Here, we'll just kind of hit the read more here real quick. The Federal Reserve Bank of New York quietly posted names of banks that grabbed billions of dollars under the Fed emergency repo loan operation that commenced on September 17, 2019. Again, before we had any clue that we were going to go through 2 years of closures. This was happening. Months before there was as I said, crisis, anywhere in the world. The emergency repo loans were made via open market operations at the New York Fed under the dot. So, let's go down here and see maybe who. Since the emergency repo loans were initiated in the third quarter of 2019, that meant 8 quarters had passed, and the public was entitled to the information for at least the month of September 2019. We asked the Fed yesterday for the data and were stunned to learn that it had already been quietly posted. They posted the names of the banks and entities that received, and it's been couple years since this has happened, folks. So obviously they waited this long to post the names on who they bailed out in 2019, and they quietly posted the names because they didn't want to make a big deal of it. They didn't want to let. Again, this is what you've got with central bankers. This is what you got with the Fed. It's a race to the bottom for these people. They know they're in a fiat species race. The question is who gets there last. And maybe the dollar will be the last one to the glue factory. That being the case, they have to jawbone these markets. They have to jawbone this fiat currency. They have to jawbone about rates, raising rates, not raising rates. They have to. It's kind of like, a sinking ship, as I've been saying over and over. Think of the U.S. dollar and every other fiat currency, not just the U.S. dollar. U.S. dollar is the last ship to sink, probably. All right. So the U.S. dollar being the last ship to sink, passengers are up to their neck in water, and this is, I think, where we're at in the current stage. And you've got the Federal Reserve saying, nothing to worry about, folks. This is all planned. This is all part of the operation. You're fine. You're with just a little bit of dip. We've got a tiny little thing we're working on here, and once we've got the tools to fix this, so relax, enjoy the water. That's kind of what we got going on right now, in my opinion. So good article here if you want to see who got that money. Again, JP, Goldman Sachs. And as they put down here, this suggests that there was a derivative counterparty problem potentially triggered by Deutsche Bank crisis at the time. So there's some serious crap going down right before the 2020 deal. So the economic crisis, here's what's going to happen too. Remember this. Politicians, economic leaders are going to blame the economic crash on 2020. This is what they're going to do. You know why they're going to blame the economic crash on 2020? Because it takes them out of the equation. They are the ones that created the crash. The crash was happening in 2019. They never fixed anything since 2008. So the truth being is they just kept throwing more money. Government and economic leaders just kept doubling down on stupid. So basically what you've got here is you've got the greatest excuse for economic and political leaders worldwide why the economy crashed and why you have no savings, or why you have no money, or why the dollar is worthless, is going to be blamed on 2020. Don't forget I said this. It's the truth, but the truth is we know who to blame. Let me move along to the next thing here. Yesterday's video, not if but when. We put a title out there that was really, I think somehow some word or something put up for the original title. I go up and I look and I say, what the heck was that? It's like a Rosebud moment almost. Inside joke if you saw it. If you didn't, don't worry about it. Probably not that funny anyway. Thanks for everyone for watching yesterday's video on gold and silver reports, and it was kind of, we just went over a little bit of everything. And let's see if there's any questions to my video from yesterday, and let me kind of open that up a little bit. Oh, and sorry, close your eyes, going to make you dizzy. Kind of political stuff, yeah, Rosebud moment for sure. I laugh every time on the video. Yep, thanks, Jeremy. Nice to see you watching. Guy as well, I appreciate that. We hear more people wanting to tax the rich. The government has finally defined the rich as being anyone with $600 more in the bank. Yeah, that big 2.5 or 3.5 trillion dollar package or whatever it is, even if it gets whittled down to 1.5 trillion, they've snuck this $600 IRS thing in, folks, where everything you do, period, is going to be reported to the IRS. I just see nothing but major audit issues and audit problems, and things getting worse if they do that. Americans like their privacy. Even I won't say even. Americans that do nothing wrong like their privacy. You know what I'm saying? Just because you like privacy doesn't mean you're doing anything wrong. It's, and the issue with these people is they make it sound like, oh, you got something to hide. No, I like my fucking privacy. I got nothing to hide. In fact, I do everything by the book, but I like my fucking privacy. Excuse me, I threw 2 F-bombs in there. It was worth it. Not too much to talk about. There goes my personal phone ringing. I wonder who that is. That's true, Joey. Absolutely true. And yeah, all you folks, Chris, Michael, thanks for watching. Mark Hall, Brand, and all you folks. Yeah, I really appreciate you watching. Let's see what does RD says. Yeah, RD, I don't think you're going to see sub 20. I just, I said that many times in the last couple months. I just don't think we were going to see sub 20. If we did, it would only be in a collapse style thing or super temporary for some weird reason. Thanks for watching, RD. And John Gordon, nah, I don't want to. I hope, I just want to see the whole world get along. That's the best thing. Governments are the real evil. out there, and corporations aren't evil. Only corporations that are in bed, crony corporations, they're evil, and governments are evil. People are not evil. And in fact, most of us, whether we're Chinese, American, no matter where we're from, Russian, we all get along. Actually, you meet your friends from other countries in a bar or restaurant. You have a great time with them. We all have a lot in common. And I think we're all discovering, from China to Russia to everywhere, it's our governments are the issue. It's not the people. Well, anyway, thanks for watching, John. I really appreciate it. And I'm a peaceful, pacifist kind of guy. I want to see everyone get along. In the words of Rodney, what was his name? Rodney King. Why can't we just all get along? Hey, best deal. I can tell you, here's 1,000 ways for me to tell you what the best deal is. Okay, in one word. Do not spend more than $4.25 an ounce on 1 ounce, 10 ounce bars. Don't buy Silver Eagles, as pretty as they are, as much as I love them. They're overpriced at the premium. You'll never get that premium back. Don't buy 90% right now. Premium is way too high, just stupid crazy. Premiums for 90%. The best deals out there are going to be, mainstream, are going to be 1 ounce generic bars if you can find them. Britannias are a good deal. I got a great deal on St. Helena's right now here in the store. 10 ounce bars are a good deal. I've got some in stock currently, folks. My back order just came in. And 100 ounce bars, again, best deals. However, everything across the board on all the retailable silver products, 1 ounce, 10 ounce, 100 ounce, has jumped up anywhere from 25 cents to 50 cents, but still way cheaper than Silver Eagles and 90%. Both of those items I like, but I don't like the premiums now. Same thing with gold, but gold seems to be a little more readily available. KRs are on back order. It seems like there's not a lot going around right now. They were a best deal for a while. However, anything that you can pay under $80 an ounce for on gold or under $90 an ounce, I think is a good deal. Even gold eagles have come down to a reasonable level at $120. However, there's still cheaper products to buy than gold eagles. Well, what is I can't say it enough, and in fact, I can say it here as many times as it's on this page, thousands of times. Buy local, folks. Think local, shop local. Keep that money in your town. I know some of you have some sucky dealers, but hey, it is what it is. Even if you have to drive an hour or two, do it. I advertise here locally in South Florida at my brick and mortar store. We don't do online sales, but I advertise to beat APMEX, JM, and SD Bullion, the 3 big online companies that I believe are secure and you don't have issues with. But it's easy for me to beat them. I don't have the overhead they do. And I can also beat them in giving you great advice, personal advice when you come in. You get a smiley face too, and you can ask questions, unlike online. So there's a lot of reasons to find a good local precious metal or coin store, in my opinion. And that's just a few of them. Well, that's it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 and 4. Happy to help you out with whatever you need. We've been here since 1977. I'm sorry, not this location. I've been doing this since 77. Started working for my father, second generation dealer, and I've been in this building since 1995. So we got a track record, man. Also, I know what I'm doing. Hey, thanks for watching. Appreciate it. Have yourself a great day, and we'll talk to you tomorrow. Bye now.